All right. Hi, everyone. Welcome to our 2025 Tax Tips webinar. We are so grateful that you are here and we're excited to dive into this content with you all. Before we get started, I do just want to introduce myself. My name is Lauren Wegman. I'm the Marketing and Client Care Specialist here at Harvest Point. I recently joined the team back in June after graduating from the University of Iowa, so go Hawks. But we are so excited to present this webinar, and I am behind the scenes, so if you see me looking a couple different ways today, just because I'm trying to control the slides too. So great to meet you all, and I just want to cover a brief agenda before we get started. We will start with an office and market update from Tim, followed by some tax updates and tips from Laura. Then we will have Cameron walk you through how you can find and access those important tax documents. And then lastly, we have reserved some time for a Q&A session where we will answer your questions. As many of you may know, faith-filled generosity is a core value that we have here at Harvest Point. To honor this value, we have selected a charity partner for each of our events and webinars. For this webinar, we have selected Convoy of Hope. They are a faith-based nonprofit organization that provide relief to communities around the world. And currently, they are on the ground in California, helping provide families and individuals with support and relief from the wildfires. So on behalf of your attendance at this webinar today, Harvest Point will be making a donation to Convoy of Hope. Like I mentioned earlier, we will have a Q&A session at the end of this webinar. So if you have any questions that come up, please feel free to email them to our info@harvestpointwm.com. This is how we will field those questions, and then I will make sure to hand them over to our panelists today. We are unable to have a chat or Q&A feature, but we can get these questions through our email. So please feel free to send those in. And as a quick caveat, if it is specific to anything related to your specific tax situation, please just consult with your tax professional, as we are not tax professionals here at Harvest Point. And without further ado, I'm going to hand it over to our founding partner, Tim McLaughlin.
Thank you, Lauren. I appreciate that, and welcome everyone today. It's one of our favorite topics to talk about. You might think that we're a little weird when we say we like to talk about taxes, but so many facets to it, and we always want to be on the forefront of that side of things for all of you. Like Lauren just got done saying, we are not tax preparers. We always like to make that very clear up front. We can get you connected with a tax preparer, and certainly are happy to do that. But of course, everything on the call, the webinar today, is for education purposes only. So thank you for joining. Usually at this time of year, it's frigid outside in Iowa. And of course, today we have 4 different states represented on the call. So appreciate everybody making time to attend. But yeah, in Iowa, it's usually frigid. So it's a great time to work on your taxes, making sure you have your tax documents ready to go. But today it's over 50 degrees, or supposed to be here in Iowa. So makes it a little harder to sit down behind the computer and gather all of your documents when the sun is shining and it's about 50 degrees outside in late January. But we could have worse problems. We could be like Pensacola, Florida, where they have over 10 inches of snow, or they did a couple weeks ago. So pretty unusual winter weather season. But what is not unusual is taxes and documents coming out this time of year. So we have some great information for you today. Before we get to that part of our presentation, I did want to just provide some team updates. And I think everyone on the call is pretty much well aware of all of these, but we do have some guests, of course, that we always want to make sure that we are giving some updates to, and some introductory comments on how we work with our wonderful clients. So Kathy, as of the end of last year, as everyone knows, has retired and has gone into her new role at our firm as our strategic advisor, just staying in touch and more of on an as-needed basis. Really happy for her, and as she's now launched full time into retirement, and we're going to do our best to carry on her legacy of serving all of our wonderful clients. Tim Fitzgerald is a tax preparer. So I know I just got done saying that we don't prepare taxes, and we don't. However, Tim Fitzgerald, as part of his separate business, has a tax preparation business called Fitzgerald Tax Strategies, and he would be happy to speak with you if that is something that you would want to consider. Of course, that's a separate arrangement, just like your current arrangement with your tax person, and a separate conversation. And so we always want to make that very clear. However, Tim is also a financial advisor. He and I worked together, as did some other advisors here in our office back in the Waddell and Reed days. And so we're happy to have him come in under the Harvest Point umbrella as our newest partner, and a warm welcome to him, and looking forward to a bright future with him on board here at Harvest Point. And then, of course, here in the Des Moines area, if you've been into our office, we were able to do a little bit of a refresh around the office, some new carpet, and updated some paint on the walls. We've actually been in this location since 2012, so going on just over 13 years now, or up to 13 years. So it was time for a little bit of a refresh, and we were thankful that we could do that. I know those of you who have had an opportunity to come into the office already have seen that, and we always hope to have a welcoming environment, professional environment for you as we do our meetings. With that said, I just wanted to run through a few items that, again, most of you clients will know, so I really won't spend too much time on these slides. But again, for the benefit of anyone who might be new to our firm, Harvest Point exists to faithfully guide and equip our clients to wisely steward the wealth that has been entrusted to them. And so we view ourselves as a firm that can do that in a comprehensive manner. And really, we have been privileged to have just about a 98 or 99% client retention ratio for several years now. And if you combine all of the experience that we have together as a firm, it adds up to about 72 years. And that's even now without all of Kathy's almost 40 years factored in. So we've tried to assemble a group of professionals and individuals here who will serve you and your wealth and financial planning needs. And then, of course, we're family owned and operated. On the screen now, you'll see the current individuals who are associated with our firm, and touched on several of those already. You'll hear from others of those even yet today, and I know many familiar faces on that screen. So, like I said, I won't spend too much time on this particular page, but we do have some QR codes on the screen. We always put these up at any of our events or our webinars, but you can feel free to scan the QR code there on the left if you want to send a link to someone who might be interested in learning about whether they would be a good fit to work with us, and likewise we would maybe be a good fit to work with them. That's a great place to start that Become a Client page. Or the QR code on the right there is up there to simply just leave us a review via Google to just share your experience. That really does help prospective clients just have a little bit of a better understanding of what it is like to work with our firm. The client, many of you on the call today, you are the most important person in our company. And again, we don't exist as an organization if it's not for you. That's not lost on us. We take very seriously our role to come alongside you, provide guidance, expertise, wisdom through all of life's ups and downs. And we all know well that is happening in an ongoing fashion as time goes on. Family dynamics, job changes, retirements. Unfortunately, we lost several clients last year, and that's always very difficult. We miss those clients. They were, in many cases, some of them foundational in our firm, in supporting us and us hopefully supporting them and their families. So we always operate with this thought at the center of each of our days, each of our meetings. We're constantly coming back to, we are here to serve you as the clients. This is not our money that we're managing. It's the money that you have been entrusted with. And that's just how we operate. So always important to cover that. By way of a market update, I did want to just mention a couple things that we are seeing right now in the economy and in the financial markets. So 2025 is off and running. We are now looking back with the advantage of having the full year of 2024 closed and in the books. we can say that on the equity side of things, so the S&P 500, which is an index made up of 500 different companies, it's a broad representation, or at least one of the broad representations of the financial markets. And that particular index, which if you were invested in that index, it's definitely for an aggressive investor. But that index was up over 20% in terms of growth for the second consecutive year. And that has actually happened 8 other times going back to 1950. So it begs the question, of course, then what happens in that third year, the year after the back-to-back 20+% year gains? And as you can see in that right column, we have only had 2 instances where there was a negative return in that third year on the S&P 500. This could very well be the third. Of course, we don't know that at this juncture. However, in 6 of those instances, it was higher. So you'll see an average gain there, interestingly, of another double-digit positive for a third double-digit positive year in a row at 12.3% on average for the S&P 500. Whether or not we get there, again, remains to be seen. There are certainly some headwinds, inflation, the interest rate environment. We still need to see those things kind of normalize out and come down or stay down. But in terms of corporate earnings, we're pretty optimistic. LPL Financial would say that they are cautiously optimistic about the financial markets, the economy going into 2025 here. And so we're watching for that. We've heard other asset managers say, anywhere from a single-digit negative to maybe a single-digit positive. That's probably a good place to be thinking. Then again, as we oftentimes share with you, we do not put ourselves in a position where we make predictions on where the market is going. That never ends up ending very well. However, we are monitoring it very closely, and we report back to you. More of our focus, as you know, is on your individual situation, on the items and aspects that we can control within that financial plan, and trying to position and put yourselves and your families in a place where you have the financial security you need to make decisions preparing for, or as you enter into, or of course, as many of you would be the case for you, operating inside of retirement right now. So on the next screen, you'll see here just another emphasis that those large gains these past 2 calendar years are actually not as uncommon as you might think. In fact, there's been 22 times since 1950 where the S&P 500 has gained 20%. So now we're looking at it on one-off individual years, not on consecutive 20% years in a row. But in this instance, very interesting to see that 22 times 20% or more, and only 21 times with a negative return. So actually more instances of 20% increases on the S&P 500 than declines in and of themselves dating back to 1950. So helps just put into perspective that remaining invested, having exposure to the equity markets has been a really good thing for investors, as long as they can operate at their risk tolerance and understand the risk that is involved. Of course, there's a risk of the loss of principal in any investing that you do. Nothing is guaranteed within the stock market. But if we simply look at history, as the results bear out here, even on this particular screen and slide, that has panned out really well for folks over the long term. With that being said, one aspect of the cautiously optimistic is, of course, that we actually have not had a 10% or 10% decline, which we would call a correction. It's commonly known as a correction. We've not had a correction in the financial markets for over 1 year, and that is not common. Usually every 1 or so years that there is at least a correction in the financial markets. So stated differently, we are overdue for a correction, a decline of 10% or so roughly from where we're at on the highs. So we're on the lookout for that. I think probably fair to say that will likely come sooner rather than later. We view it, as we do most corrections, as a good buying opportunity. So cash on the sidelines might be able to be deployed at that juncture. Obviously, again, depending on your individual situation and risk tolerance, that may vary. So we'll dive into that with you individually during our meetings. But safe to say that we're probably on the lookout for that here in the coming 6 to 12 months, sooner rather than later, in that regard. So it's always good to mention that. Well, with all of that said, both our team updates as well as our market updates, I do want to introduce Laura Nihilus. She is a CPA and a CFP. Of course, with that CPA designation, she is not currently preparing tax returns. So she did that in a prior life within the industry, been in the industry for over a decade now, and helping serve clients on the financial planning side of things, but brings a diverse tax background as well with her knowledge and expertise in that regard. But we always do want to make that clear. She is a CPA, but presently not preparing tax returns for clients. But Laura has all of the knowledge and information on what we need to keep our eyes on and be on the lookout for as it comes to tax season 2025. So without further ado, I'll turn it over to you, Laura.
Thank you, Tim. And thank you everyone again for joining us today on this fun-filled topic of taxes. So I'm going to go through an overview of just things to think through going into this current tax season, and then as well as looking at tax updates for the 2025 year. So first off, everyone knows most likely by now, April 15th is a tax deadline. This year, no weekends or anything changing that date. And the first filing deadline, or ability to file your taxes, not a deadline, was January 27th. So that was the first date that the IRS started accepting tax returns. Now, we wouldn't recommend starting to bring everything together and file it now, because the first priority is wanting to make sure that you have all of the tax information that you need. That just reduces the amount of time that you and your tax preparer have to spend on your taxes, and it even ensures that you don't have to do an amendment because you're missing an important piece of information. So that's really important, because amending a tax return takes you more time, costs more money. So first priority, make sure you have everything. You can always give us a call to see, if you have all of your documents yet, and we can kind of go through to ensure that, you have everything that you need from your accounts here with us through LPL. And yeah, so that's just a great first thing to think through. A lot of people want to file right away, as soon as possible, get it over with. And there is something beneficial to that, of trying to file earlier. Once again, you have all of your information, because we have seen, in the past years, that if anybody gets any of your tax information, they'll try and file a false tax return with that one piece of information that they have to try and receive any tax refund. So it's kind of that balance between waiting to make sure you have everything, but then getting your stuff sent off to your tax preparer as soon as you do have all of that, to try and get your tax return filed as soon as you can, with all that information. And, talking through just different frauds and everything, you also want to be very aware right now with an uptick in fraudulent calls or scams saying that they're the IRS. And those could be just through the phone, email, text. If something sounds really compelling, one thing that you can do is ask for a reference number from them. Then stop that communication and then call a number that you find on irs.gov, just to make sure that you're connected with a reputable source. Give them that reference number, because you really want to make sure you don't don't go deep dive into any information that you're not sure of if someone just gives you a one-off call. Just be very vigilant with that. So best thing to do, get a reference number and then you call them directly. Okay, then tax statements, you will be receiving those, so watch out for those. You'll get them either in the mail or on your online access, which Cameron will talk about later about online access. And for your tax statements in the mail, just be extra aware of, things might come unmarked. So just go through all of your mail, get it out of the mailbox every day, just to be extra safe. Go through it and then set those things aside in your tax pile for when you have everything that you can give it to your tax preparer. And so looking at mailing dates, your Form 1099-R, you should most likely already have, because those were sent January 17th. And in a little bit, I'll go through kind of what that looks like. But so that's one big piece of information you'll get from us. The other is a consolidated tax statement, consolidated 1099. And those have started to be sent out already, but it all depends on the complexity within the account. And then as well as the securities that are within there, to know when you're going to get those. So I would expect just those are going to start trickling in here, and could even come in through March 7th. So middle of March by the time you get them in the mail. So just be aware. And again, always give us a call if you're unsure whether or not you have everything that you need. So here's a 1099-R. So you would receive this if you had a distribution from an IRA retirement account. Most likely if you had a RMD, required minimum distribution. Qualified charitable distribution would also be in there. You want to make sure you let your tax preparer know if you did do a QCD in the previous year, since that's not reported very clearly on the 1099-R. So just make sure you let them know and show them the receipt for that. You'll also get this form if you had an annuity, distributions from there, or even a non-taxable annuity change from one annuity to another. So again, any questions, if you have them or not, or should be getting them, you can give us a call. And this here is the form 1099 is a consolidated statement. So the main pieces are these first two pages. It's going to kind of look like a big report, because this is just 2 pages of it. And then there's a bunch of detail following it. So sometimes people don't really trigger it or identify it as a tax form right away, but definitely is. Make sure you give every single page to your tax preparer. That really helps them just be able to go through your information more quickly, because there is a lot of information in the final pages that they need. In my tax preparing days, some clients thought they were doing us a benefit by taking out the blank pages, but that actually causes you more time and us, because we look, or the tax preparers look at the page numbers to make sure all of the pages were there, to make sure we have all the pages that we need to accurately file your tax return. So to reduce questions, just put that whole thing aside and give them the whole entire thing. Then the next form is a Form 5498. So this one can cause a lot of confusion because it can even come after the tax filing deadline. And so people get it, they think, oh no, I filed without this information. Well, this form is purely informational. You don't need to give it to your tax preparer. You can if you want, but you really don't need to. It just is a form showing how much money you put into a IRA account. So again, informational, keep it with your tax information just to have a record. And if that's easier to send it to your tax professional, you can. But just be aware it could come after you file. You're looking at Iowa taxes. We have some Iowa people on this webinar, and then it could be a little bit different for some things in different states. But one big change for 2025 in Iowa is that we now have a flat income tax rate of 3.8%. And that is the sixth lowest income tax rate among the 41 states that have state taxes. So that's a fairly big change going forward. And as people probably aware from last year, especially if you already had retirement distributions, that in Iowa, it is now excluded from Iowa taxable income if you're 55 years or older. So that's a great benefit that we've already seen for clients here in Iowa, that they no longer have to withhold, unless there are other situations, but don't have to withhold money from their distribution in their account. And this even counts for like Roth conversions, which is great for that tax planning portion of that as well. One last thing is a 529 plan contribution deduction. You can deduct up to $5,800. Most states have some sort of college saving plan, so I'd look into that and see what deductions you can get. But in Iowa, two parents were to have separate accounts for two different kids, and they each, max out that contribution, they could actually deduct $23,200 on their Iowa tax return. So that's a great way to really start saving up for college. And even if you need to do like a quick, they're going to go to college in a few years and just want to dump extra money in there. That's one great way to do it. Grandparents can even take advantage if they open up accounts for their grandkids this way as well. So that's another good thing to look out for in every state. Talk to your tax preparer about that too, of how beneficial that would be for you. We can look into what's new in 2025. So there are just a couple different updates with the Secure Act 2.0 that have come into to light and to start to be effective this year. First, individuals can contribute to their 401k plans. Increases a little bit up to $23,500. This is also the same for a 403b and government plans like the 457 and the thrift savings plan. And then if your age is 50 and up, you can get a catch-up contribution of $7,500. And then this last point, the higher catch-up contribution, some people call it the super catch-up contribution limit for those aged 60 to 63 is $11,250. So instead of that $7,500, if you are ages 60 to 63, you can contribute $11,250 in addition to that $23,500. One caveat though for that super catch up is that employers also have to allow that. So that's when you'll want to just verify with your plan administrator that you can do that super catch up, that higher catch up for ages 60 to 63 to take to get the benefit out of that. So just looking into the advanced strategies and considerations. So we've talked with some clients, about Roth conversions. Those can be a great benefit for clients, especially if they are kind of in these years where their income is lower. Maybe they just retired. They're not starting to pull Social Security yet, or starting to pull money from a pension, annuity, or anything like that. So their income is just lower. While a Roth conversion could be a great way to utilize that lower income year. So that's definitely something you can talk to your tax provider about to see if that would be beneficial for you. Because it is always kind of a trade-off between trying to understand if your tax rate, your tax burden now is higher or lower than it will be in the future. So that's kind of the game that you're trying to play. But some situations, it does just make sense to do a Roth conversion, and it's a great tool to utilize. One thing to note as well, that if you have a big priority on giving money to children, grandchildren in the most tax efficient way possible or most beneficial way possible, is Roth IRA accounts are great for that. So even just a smaller fund or just having that is a great way, because they aren't taxed on those distributions. In a traditional IRA, they only have 10 years before the whole entire IRA balance has to be distributed. So it's just one thing to note, but as always, you need to figure out, okay, what's your priorities? Is it tax savings? Is it passing money on to the next generation? And so we can definitely have a conversation with you on that and loop in your tax preparer. Qualified charitable distributions. This is a great one for anyone that has required minimum distributions and is already giving money to charities or to their church, because you can just take money from your IRA, and any money that goes to those charities through a QCD isn't taxable on your tax return. So if you're already putting money there, then why not do it in the most tax efficient way possible for you? So that's a great thing that you can talk with us, and you can even do it before you have required minimum distributions, but you do have to be 70 and a half to start utilizing the QCD, qualified charitable distribution. Another thing that you can do is utilize a donor advised fund. With current tax rules, most people aren't itemizing on their tax return because the standard deduction is so high. So one thing that you can do is bunch your contributions into 1 year, and instead of giving it all to the charity in that 1 year, you can use a donor advised fund. So you put money into this fund, bunch it so that in that tax year, you can get over the standard deduction and take benefit of that. But then in the following years, you can give money out. It doesn't all have to be given to the charity in 1 year. So that can be a great thing for people to utilize. The homestead tax exemption, that's for people ages 65 and over. Iowa just started it a couple years ago. So you just want to fill out a form, and you get an exemption of how much property taxes that you have to pay. So definitely look into that to make sure you have that on file. And even for anyone else under age 65, there is a homestead tax credit. It's actually the same form that you fill out. So make sure you have that. And other states I know have something similar as well. So definitely look into that with your county. And a lot of times it's before July. So make sure you kind of look into that sooner rather than later, that you have those forms in place so you can start getting the benefit of it. TCJA, so that would be the Tax Cuts and Jobs Act. That will sunset after this current tax year. So those are all of the provisions that when Trump was in office last time, this was kind of his big thing, his tax, all the tax rules, provisions that were put in place while he was in office. So they're set to end after this year. So that would mean higher tax rates, lower standard deductions. But of course, now Trump is in office again. So a lot of people are thinking and seeing that things should still remain about the same, that they'll be able to put things through that either extend these indefinitely, or at least, put another provision on for the next 5 years, whatever it may be. So we don't anticipate a lot of changes, but that's definitely something to look out for. Some people might mention how he's recently even said he wants to get rid of federal income tax completely. A lot would have to happen for that to actually come into effect. So that sounds nice, but again, a lot of people would have to vote yes. There's budget that would have to, be taken into account. So even if that were to happen, a lot of times you would see the costs elsewhere. So it's not something that we would ever tell clients to anticipate, or even if it was going to happen, to really change their financial plan based on that. Because we like to just, kind of look at the worst case scenario of, okay, if you're paying this taxes, let's make sure that we have something there just in case anything else happens. So could see different changes, but anticipate about the same. In the Secure Act 2.0 provisions, those were for retirement accounts, and we actually went through the different rules that came into effect for this year, mainly that super catch-up provision of for ages 60 to 63. So that Secure Act had a bunch of different rules in it that came into effect different years, but kind of dwindling, but now we're seeing that benefit for ages 60 to 63. So with all of that fun information, I'm going to now pass it over to Cameron. He's our client service specialist, and he's great with helping people get online access. So let him take you through all of that.
Awesome. Thank you, Laura. Some great insights there into some of the tax strategies and deadlines. As Laura was saying, I'll be walking us through online access and kind of how to access your account view profile. If you don't have an account view profile, this can still be pretty helpful for you and may even give you some insight as to why you might want an account view profile. So the first step is going to our website. If you don't have the account view login bookmarked, this is a great way to get to it. On our homepage, you'll see the red circle there where it says client login. If you click on client login, it will pull you to a page that has account view and another portal site on there. We're focusing on account view today, so you'll just click login in that red circle and it will pull you to the account view login page. On this page, just like anything else you log into, it's going to ask you for a username, and then it's also going to ask you for your password. If you have any troubles getting your username or password or getting access into the account view site, that's totally fine. Feel free to reach out to our office and I can help assist you in that and kind of getting your access into account view. Once you're in account view, you'll come to the home page, and this is where all of your account view information is housed. So today we're specifically looking into the documents section. So we're going to click documents there where the red circle is. It's going to give you a drop-down list of some different document items that we might have. We're going to go to the tax forms section today. So when you get into the tax forms section, there's going to be some drop downs that you can click on that are going to give you previous years or the current year. And all of your tax forms as they come available are going to show in this documents tab under tax forms. So if you don't see all of your documents there yet, that's okay. Like Laura was talking about, there's a kind of some different dates for those as they come out. So don't worry if you don't see them yet, they're probably still coming out. And this will show up regardless of if you have paperless settings or mail settings. So even if your documents are getting mailed to you, if you have an account view profile, you can come here and as soon as they're available, they'll show up for you. All you have to do is click on those LPL 1099Rs. It'll pull them up on your computer. You can view them that way. And then they're really easy to save to your desktop or use if you need to send them to your tax preparer. If you haven't received your tax forms by March 1st, please feel free to reach out to us if you haven't received anything yet. That would be unusual if you're expecting a tax form, and we should be able to walk you through kind of what we're seeing or what you should be expecting and get those documents to you. So, as a lot of us do nowadays in the new age, there's some tax software importing, specifically with TurboTax and H&R Block are the two big ones that we see. And they might ask you for some specific information to upload your documents into their websites. So they're going to ask typically for your 8-digit LPL account number, or they're going to ask for an 11-digit document ID. These are both listed on your 1099s on the tax statement. Basically, in these tax statements, on all of them, at the top of the page is going to be the detail information. On your 1099-R, which we're showing here, it's going to be on the top right On the consolidated, I think it's in the middle and top right, but typically they're towards the top of the first page. We have them circled here, so your account number will be there along with that document ID. So really whatever they're asking for, it should be there. If you can't find that information or you're struggling to kind of get that information and get it entered in, please feel free to give us a call and I can help assist with that as well. Once you've logged into your account view profile, you may also get this pop-up. This pop-up is for people that are going to be importing their tax documents. It's kind of a nice new addition that they've done to make it a little easier. All you would do is click go to documents and tax forms, and it's going to pull you to that document section, kind of like I walked us through. So if you have any questions getting access to these documents or importing them or your account view profile, please feel free to reach out to me and I'm more than happy to assist. So paperless settings, Laura kind of touched on it, on how you can get documents online or in the mail. The paperless setting is something you have to set up though. So typically you're defaulting to being mailed documents. If you don't want them mailed to you in your account view profile, you can follow these steps to get them sent to you paperless. So on the home page, you're going to click Go Paperless. It's at the top of the page. There's a little green bar. We'll show you some screenshots here in a second so you can see what it looks like. Once you click Go Paperless, you're just going to select how you want to receive each document. So there's going to be statements, additional documents, and tax forms. It's not all or nothing. So you can have your tax forms be paperless and everything else mailed to you and just kind of customize that as you would like. Once you've made your selections, you're just going to click Save and accept the terms and conditions. And congratulations, you're now getting paperless delivery. So on these screenshots here, I'll kind of walk through what that looks like in the account view profile. So again, on our homepage, you'll see the red circle there around Go Paperless. You would just click Go Paperless. It'll pull you straight to this screen showing you currently how you're receiving things. If you want to change it, all you do is click where it says Paperless and then click Save. And then you're paperless. All your documents will be sent to you. The nice thing about paperless is you don't have to wait for them to get mailed to you, for them to get lost, accidentally thrown away because they look like a bill, anything of that nature. Once you're paperless, they will email you as these documents appear in your account view profile. So you don't have to play the waiting game of wondering where they're at. You'll get an email that'll say, perfect, your 1099-R is in your account view profile and ready for you to view. And then you can go in and access your documents from there. The next thing we're going to talk about in the account view profile is authorized user access. So this is a little more uncommon, but it is something that we offer through the account view profile. In your authorized user access, you can give access to a family member if they help you out with your taxes, or your tax preparer so they can view your account view profile and kind of get those documents for you. To get to authorized user access, you're going to log into your account view profile just like you normally would. You'll click the settings icon in the top right-hand corner. Then you're going to click My Information. It should be a little tab icon. And then in the authorized user access, you're just going to click Manage Authorized User Accesses. The one thing to note about this is in order to add an authorized user, you have to have their email address. So if you don't have their email address, it won't be able to add them because it needs to send them an authentication to their email, allowing them to activate their authorized user access. So again, I'll show the next screen here of kind of what that looks like on those account view profiles. It'll say relationships, or I think it's changed now and it says My Information. You'll just click where it says Manage Additional Users, enter their email, and it will send them an email to kind of get that authorized user access updated. Once you've added an authorized user, they will have access until you remove it. So in order to remove an authorized user, once they're done, maybe you're done with the tax season, you don't want your tax preparer to have access anymore, you'll just go right back into this, click Manage Additional Users, and you can just delete their access from there. And then next tax season, go back in and add them again if you want. And that's kind of how the authorized user access works. If you have any questions about account view, if you don't have it yet and you want to get it set up, or if you're confused on the paperless settings or how to add an authorized user, please give our office a call. I'm more than happy to walk anyone through this. I have emails that I can send with kind of step-by-step instructions as well that could help. So if you're having questions, please feel free to reach out to us and I can kind of assist walking through the account view profile. I'll pass it back to Lauren now, and she will go through our Q&A section of our questions.
Awesome. Thanks, Cameron. That was awesome information. I hope you guys got as much out of it as I did. We're going to go ahead and jump into some of the questions that you have all sent in. So this first question, it looks like it's going to be for you, Tim. It's from Kelly from Missouri. She has a question regarding converting from her TSP account to a traditional IRA account to finally a Roth account. What would the tax ramifications be for that year's taxes and the years that follow until all of her money is converted? Would her estimated taxes increase also?
Great question. Yeah, thank you for that, Kelly. And really, that there's some multiple level of steps involved there in that question, and we would guide you through those. Of course, where we always start whenever we talk about rollovers, whether they be from a 401k or a 403b or a TSP, we have an education-only policy in regards to rollovers. So we kind of try to provide you with all the information that you need necessary to make the decision, and then from there you're able to do that. So this particular question is right in regards to that, and taxes come into play when we're talking about a situation where we have a conversion involved, preceded by a rollover. So money that's in a TSP would be able to be transferred over to an individual IRA account, and that would not be a taxable event. So that would be tax-free, one pre-tax plan to a pre-tax IRA account. So the year in which that occurs, there is no tax consequence, and you won't have to worry about setting aside anything else for taxes. Both accounts would be considered pre-tax, so the traditional IRA account would continue to exist as a pre-tax account. Then the second step from that point forward would be to, as you mentioned in your question, Kelly, you would take money from that traditional IRA and transfer it, or it's otherwise known as convert it, into a Roth IRA. So we'd be going from pre-tax status to post-tax status. Now, anytime we do that, of course, the IRS comes knocking and says, hey, we need our money. Anytime you're taking money out of a pre-tax account and transferring it into a post-tax account. So when it comes to converting, we would recommend that be done in most scenarios and situations over a period of years. There would maybe be a unique situation here and there where it might make sense to do a lump sum conversion if there were other extenuating circumstances for individuals. But as it pertains to most folks, spreading out that conversion over multiple years just helps take the tax consequence into account year over year. So it will all depend on what the tax rates are, tax brackets say, and what your individual tax rate is in terms of how much you owe when you go from the pre-tax IRA to the post-tax Roth. And then, of course, it will also depend on how much we are converting. So we would come up with a strategy where we could kind of have a sweet spot in terms of the amount that it's able to be accounted for on the tax return. You're able to pay taxes on it, because most commonly it's beneficial to not have taxes withheld upon conversion and instead pay the taxes out of pocket from a non-retirement account, your checking or savings account. Estimated taxes, as was mentioned in your question, that might be a way to account for the taxes due come tax time. So definitely more of a nuanced situation there, and we'll dive into that with you individually, but I know that broadly applies out to other clients as well. One final component I would introduce into the evaluation with that type of a decision would be where we are at today in the tax world. In other words, if you were to go back to 1970, the highest federal tax bracket was actually 70%, if you can believe it. Today, it's 37%. Might have some surtax on top of that to get it just above 40. But that's a big difference. So when you take a look at not only that, relatively speaking, with where we're at tax rate wise compared to history, but also the level of federal debt that we're in, where we've come with tax rates. At least we're probably in the camp as a firm, broadly speaking, that it's more likely than not that in the years that go that are ahead, we will have higher tax rates than we do today. Might not happen right away, might take some time, but broadly speaking, it's likely that tax rates over the future years to come will be higher than they have been in this past decade or two. So that is another component of the decision, because converting from pre-tax now to post-tax, if you do it in the next few years where the tax rate is relatively low compared to what it might be in future years, in theory, then you're saving or having a tax savings over that period of time. So that's another element to the decision, is how much could you save in taxes? Again, a lot of components, a lot of unknowns involved in that. We try not to bank too much on that, but just look at everything in its entirety to help make a decision. So sorry, Lauren, that was probably more than we bargained for in the Q&A, but it's a really insightful question that has many dynamics and applies, again, broadly to a lot of different situations.
Awesome. Thanks, Tim. Our next question comes from Josh from Iowa. What is the best practice to minimize the amount of back and forth between myself, my financial advisor, and my tax preparer? Every year, I feel like I'm constantly missing something or meeting with my tax person before everything is ready. Laura, this looks like a question maybe you can answer.
Yes, definitely. That is a great question. So I know that can cause a lot of headache for people, and make tax season extra, just stressful. So one, big tip, first priority, make sure you have everything that you need to file, before you send it in. That will drastically minimize, that back and forth. Then next question is probably, well, how do I know that? How do I know if I have everything? Well, most tax preparers are going to send you a tax organizer, tax worksheet. A lot of times it's just this big packet of information, and it will have previous year numbers in there. So one really big thing that you can do is just flip through there, and it'll go through all the income that you had on your previous tax return. Okay. One was interest from a bank. Hey, do I have a form that goes along with that? Okay, I do. Pull that into your tax file. Then your next thing, your W-2, pull that in. So that's a huge thing that you can do, is just go through there. You don't have to write everything in that tax organizer. Biggest thing is that you have those statements to support the numbers that you're sending in. So make sure you have statements for all the numbers that are in there. And even one big tip is, if something happened in the previous year and you see it in that tax organizer, say you did a Roth conversion in the previous year and you didn't for the 2024 tax year, well, you can just note that in there of, this didn't happen this year. Then that triggers them to know right away, oh, okay, I don't need to ask them about this. They already noted that this won't be on their tax return for this coming year. So those are big things that you can do. And for your accounts here with us, you can always touch base with us too, to make sure you have all of the tax documents that you need.
Awesome. Thank you, Laura. It looks like this last question that we have sent in here is probably for you, Cameron. I know you touched on this a little bit, but maybe you could just explain it a little bit more. But what do you do if you have forgotten your account view login? John from Oklahoma is asking.
Yeah, that's a great question. So if you've forgotten your account view login information, if you still know your username, there is a reset password option on the website. It'll just send you an email. You kind of walk through your password reset just like you would any other website that you have to log into. If you no longer know your username, reach out to our office. We have that data that we can give to you. Just reach out to us, either phone call, email one of your advisors, and we can get you that information so you can get logged back in. If you're experiencing other issues with logging into your account view, same thing kind of applies. Reach out to us. We can look into it if it's a technical issue or if it's something with your computer or your phone or apps. We all know how technology is, and it doesn't really like to play the best when we need it. So if you're having issues, just reach out to us and we'd be more than happy to assist you getting logged back in.
Great. Thank you so much. All right. Well, that concludes our Q&A session. If you guys do have any questions that come up after this webinar, feel free to still email those to our info@harvestpointwm.com, and one of our team members will get back to you on that. But thank you again for attending. If you guys have just a few moments, it won't take you more than a minute, but just take some time to fill out the survey that will automatically pop up in a browser screen at the end of this webinar. It really helps us tailor these webinars to what you want to see and what we want to plan for you. So please just take some time to fill that out. Your information and your feedback is so beneficial to us. And we thank you for attending this 2025 Tax Tips webinar. Thank you so much. It's a privilege to serve you.